Good morning.
Morning, everybody.
Good morning.
Good morning. Good morning.
Good morning.
Good morning.
Hello. I will give it a couple more minutes for join as well. But happy Thursday.
All right. Good morning. Hey, Ellen. Everyone else that's joining. Yeah, I think we had a couple links that we shared last night to the group, and one of them went to our finance call, which was wrapping up now, and the other one actually came to the asset management call, so which is this one. So David and Shariah are as well joining us in a minute. So let me get
Could someone put the link on the chat? For some reason, from my phone, I don't see the link and I can't share it. And Eric is looking for it.
Sure. Yeah. Thank you. So good.
Oh, we got the full house.
We're getting there. Let me clean up the note takers.
All right. Where is David? Give me a second. Am I going to stop recording for this one?
No.
Morning, everybody.
Morning.
Morning.
Good morning.
Happy Thursday? Thursday, yeah. So, John, hope you and family are doing okay.
All well. Thank you. Thank you. Thanks. Yeah.
All right, just give us another minute or so. We'll get started. I'm
Yeah.
looking for one file, and for the love of universe, I'm not being able to locate it today. So for everyone else, I don't know, Mike, do we get some context yet, or should I just talk through as I get?
Not yet. And I was letting a few people come in because we have we had a big meeting, couple big meetings last night, which was letting everyone know between the existing groups of masters and the Big Profits Live Millionaires to Billionaires groups, the coming together of the program, giving access to all of our calls going forward, and that includes this as one of those. So we have a set of 9 a.m. calls that everyone will have access to going forward. This being one of those, which is our asset management and contract to close meeting. What happens on this is we go through all of our we go through asset management on our side of things that we're working on, assets that we have. We've got 16 assets currently under operations in different phases of those. So part of this is like you sit in while we're going through and seeing what's happening on ours. If others have some assets they're working on currently and have some questions, we have a set of Q&A to go over that as well. And then when we're in the middle of a heavy contract to close, so if we go under contract on a new property and we're starting that contract to close process, that's about 10 to 15 minutes of this call is used for that as well. So this is a heavy working meeting combined with a combination of learning, seeing, doing as well. So welcome to all those that are new this week with us as well. And we'll let David, so you'll meet here David Ferran, who is the asset manager, portfolio manager for Massive Capital. He takes care of all of the assets and it has a heavy, not just boots on the ground type of view, but a heavy financial view of the assets. So asset management is heavy on finance, not just, hey, show up and talk to the property management company and see how they're doing. There's a lot of tracking, a lot of trending that has to happen in the asset management world. So that's a lot of that. We've got tools that we're built around it. As we go, you'll see some of those tools that supports that. And then, as I mentioned, we have the contract to close, which is run mostly by Sanjay. So asset management here is run by Schreier, contract to close mostly by Sanjay. And on the front end with Ellen, that many of you'll meet as well through time. So Ellen does the contract to close, as well as a lot of manages the acquisition underwriting process with Sanjay. So that's the background kickoff of this, and that's it. I'll turn it over to you, Schreier and David.
Yeah. Did you want to say something first, Schreier? Or
Yes. Yeah. Sorry, I was talking to. I'll plug in mute. My bad. So, no. By the way, thank you, Mike. Really appreciate it. For some of you, I mean, most of you guys, you have seen this version. We're bringing back a little bit more now, and for the rest of the team, welcome. It gets a little bit more. So the whole idea is that to give you guys an idea of how to go about looking at the asset once you do the closing, post-closing, what happens, right? So when we talk about the experience of it, it's the underwriting and the acquisition, contract to close, putting something under, finding a deal, underwriting it, negotiating an LOI, negotiating a PSA. That's if we think about it, if we buy something for 5 years, that's about 3 months worth of work. Once you put something under contract, that's another 3 months worth of work. And then the operations begin. That's 5 years worth of work. And within the operations, depending on the location and the strategy, you'll fluctuate as you kind of go through. So our goal is that we go through high-level notes, that what type of conversation, what happens, and then what are we solving for at any given point in time, given the asset that you're going to run. So, and those conversation, it's interesting to watch and see how we drive. Then we go from there, right? So what I will do, I'll share my screen. I'll take you guys a little bit. It's going to be a lot for the first time around. And it is meant to be like that. So 2, 3, 4, 5 times down the way, you'll get a hang of it. And it's going to become much clearer as we go. So no worries as that happens. I'm sharing my screen. Please let me know if you can see it. All right. So what we say that anytime we run in a system, we ask what is your platform of conversation. So this is our dashboard. It is built on something called Power BI. This one aggregates data for all the reports that we have. Our finance team every Monday rolls that up. That becomes a BI, business intelligence dashboard for all the assets that we have. So when I come in, me, Mike, and Sanjay, when we come in, this is our view of the world. Then we add your other ancillary information that we have. When David looks at it, he looks at from here, and then we have another Excel file that I'll show you as you kind of do that. We scheduled this call here at 9 o'clock. That's also because from 8 to 9, we have a portfolio review meeting. So when we come here, we have very aligned view of the world of our portfolio, right? So takeaway is whenever you run an asset, you gotta know and be in the nose, specialized asset manager if you're leading it, and then you have to be able to track the performance of the asset that you go. So this is that, right? So here we have all the assets here. One of the reason we again we always said this is we run on an honor code. You're gonna see a lot of things, and you are going to experience a lot of things. So on that note, always remember you're running a company. There are two sides of conversation. When you run an asset, it is glass is half empty because every single thing what you're working on has an almost instantaneous feedback. When you manage the investors, a little bit softened tone, right? Example, me and Michael debate about something, but when we talk about to the investors, you don't share the debate, right? Because they're not in tune of what's happening every day in and out, right? Once we are in and out, we get comfortable, which is the nature of the beast. But investor side, they're outside, so you kind of massage the conversation that way. So remember, put your CEO hat on it. Imagine you're a publicly traded company. You got investor relation report out. There are thousands of people looking at your report, and what happens inside the boundary line jives with the outside the boundary line, but it's not word by word. It's interesting way of taking a look at the world, right? So quick for us, we have this summary dashboard. It tells us what the asset of the status is right here, occupancy, and what the rent roll looks like. Then some of the key takeaway for that one, so everybody can run. So we built it this way, and so we tested that out. So next revision we'll publish that. We're working some ways to publish that. So if we partner with anyone, the partner will have the access to this dashboard. So all of us are looking at the same thing the same way all the time, right? It's not I'm waiting on you versus you waiting on me, right? So that's what. Whenever we start it here, and then we go down to our rent rolls. Go back in, and rent roll drives a lot of conversation here. So one of the things that we start, it's the cash. First thing is how much we're billing, how much you're collecting. So when you look at the assets, it's right here. So in this particular case, Amberwood, it's an asset, 61 unit in DFW area. The rent is $23. One takeaway is that if you have a property that has a rent less than $1 per square foot, by definition, 9.9 out of 10 times it's going to be CC minus area. And you are going to have to do a lot. That has a different style than above $1.20. And again, $1.20 in DFW is same as about $1.10 in Houston, because cities' earnings are different. But in the state of Texas, usually $1 it puts you on a very C minus mode. So when you underwrite it, price is cheap, but you have a different ways to go about it. So that's the way we kind of measure that. So this one, when we bought it, it was like $1.06, $1.07. Almost a year ago, we moved that forward to $1.23. We have some room to kind of move that forward. I'll do other stuff. Other example will be here, Stonegate, $1, Stonehenge, $1.06, and then the Ingleside, 70 cents, Magnolia, $1.17. The Ingleside has some vacancy. It's about to get fixed, but you could see the dollar. So takeaway operationally, anything around $1, $1.10 that you are collecting checks, your design has to be different versus when you go into the McCollum here. Where's the McCollum? Landing at McCollum. This is $1.73. This is the B. above $1.20, you started getting into C plus. Above $1.50, you are in the B zone. You hit the $2, you're in the A zone, right? So without looking at much, if you're just looking at those numbers, it tells you how to kind of calibrate your mind as you kind of go about it, right? So class A, it's all about the culture and the community and those ancillary stuff to collect the check. B, it's all about the reaction time and make sure everything looks clean. C, it's all about hugging, making sure that you are there for them, even though you're not fixing with the best dollar, right? So you kind of manage the culture that way. On the C, you'll have rent collection issue. Week number 3, important, you're priming the whole team to collect the check, right? Week number 1 is all about check collections, right? All about check collections. Week 2 and 3, it's all about the rent. How many new leases coming up as you go, right? So anyways, this is the introduction of a Power BI dashboard. This is how we kind of go about it. I'll take a pause. Any questions, comments on the BI dashboard? Let me know.
Sure.
Okay. Yes.
How often does the data gets refreshed?
Every Monday.
Every Monday.
So we have we have like our financials get updated monthly, our rent rolls and all that kind of information that gets updated weekly on Mondays, and then every Wednesday night before our Thursday meeting, this section up here in the upper right, key issues status, is supposed to be updated Wednesday night, and this is the one time that I can remember where it didn't get updated, and that's because we've got our tech support people traveling this week.
Yeah. So we update every week, but the data will not settle every week. Some data will settle as the day goes by, right? You reconcile within the first 10 days, you know how much rent you're going to collect. So your collection gets automatically settled. Expense side, by the time the month doesn't end, it's not there. But if I'm an asset manager, first thing I know, so what you should do, you should come here, take a look at it. And the way we go, where's my work order? So work order reports. So this is one of the places we come in and take a look at all the time, because interesting part about these dashboards are it rolls up and down a lot. So I can, come back and see what goes where, right? I can roll up and down to all the assets, and I can drill it down to the work order level without something. So we're running 15, 20 assets. We need to know how many work orders are over 90 days and how many of those 90 days are high priority. And if they are, why they are. This is the way you make sure operationally you're clean. You're one of the big telltale or leading indicator of a unit, or not a unit, of a property is how many over 90 days and how many of them are emergency, that cross section, right? So a mean time between the reaction, it's a very important way to take a look at it. Now that is not readily available in your asset management software, but we kind of take 9 different or 10 different kinds of report, and we kind of mix and match it up, create our dashboard. Okay, so that's how we run it, especially when you run bigger assets like the McCallum. It's a 419 units. It's a big machine, right? Stonegate and Stonehenge put together, it's almost a couple hundred and 150 units. So it adds up really, really quick. And you got to be on top of the data as you go. Again, I'm sharing a mature version of it just to kind of share the thought is that, hey, if you're running, whenever you get to running an asset, have a cadence of running the report. At least you know what to look for. If you want to check the health of the asset management, property management company's performance, one of the good indicator will be a work order.
Yeah.
Okay. So anyways, that's the first one. And then over time we'll talk more about it as you go.
Thank you.
All right.
And I would just add to that it as asset managers, it's not our job to push these work orders through. That's the property manager's job, but it's our job to stay on top of them and make sure they're doing all of the things that they're supposed to do. So if we see work order numbers that start to become 30 days, more than 30 days, why aren't these things getting done? Why aren't somebody's air conditioner goes out, that needs to be done same day or day 2. And other things may be less important, but you just got to be able to stay on top of your property manager so you know what they're doing and pushing that through. So
thank you, David.
Hey
And
guys,
then if I take,
I'm curious, does that program allow for any conditional formatting, like colors, if something's in red, like that someone can just like you know, so.
Yes.
And everything looked to be in, so everything's perfect, everything's in gray right now, so gray is
Yeah.
perfect.
Okay.
Yeah.
Good question, Shannon. Sorry, Shannon. This is great because it took us a lot to get this BI ready. So now we are making another revision. Another revision will be a force ranking with the color coding. So visually, you could tell Shannon, whenever I come in, hey, this is not good. Hey, this is not going on. On that note, we tried to bring ChatGPT where if that color coding goes to the wrong side, automatically triggers an email. We broke that thing like 10 times a day. So we kind of paused a little bit. I said, it's an evolution as we go through. But
That's
point
awesome.
absolutely right. As asset manager, our goal is to let the system do the work. At the same time, let the system tell us right away without thinking what are my bad actors or leading indicators are, and we are working towards it. So thank you. Good question.
Yeah.
It took us a lot to get here. I mean, trust. I mean, I'm sharing that, but I know it took us almost
No doubt.
year and a half. So
No doubt,
all
no
right.
doubt, no doubt. Yeah.
So now you're running an asset. You got the backend data and you have an asset management and or your partner conversation. You have to synthesize to very simplistic way. Always ask the question, what am I solving for the particular week, a particular month, for a thing, right? That question will drive a lot of decisions that way. So what you're solving for, so I'm going to walk you through our portfolio very quickly. What am I solving for that particular property in next 10 days or 14 days, right? And I'll run it down. With that note, management gets easier. Pasadena, we bought an asset HSC minus, we brought that down to C plus, finished the execution of the CapEx. Our rent collection has been the best. About 9 months ago, one of the units, about 16 of the units got fired. So we are done with that execution. CDKMS got stop the whole thing because somebody wrote the code differently than us. And that has been the biggest drag on it, but we are at the very cusp of it. So the final drawings, everything else being submitted this week, and we're done. So now, right now, what we're solving for Pasadena is the refi, how quickly we can get to the refi. That has been resolved, and we know how we're gonna go to refi. And this is one of the assets supposed to be refi this year. We execute the business plan. We bought the asset at a very good price. That paid a dividend. So we moved the refi till next year. Hopefully we'll get 2 rate cuts, and it's gonna be a cash out refi. So we're gonna stabilize the project. The business plan was to stabilize it this year, but the market, we couldn't deliver that because of interest rates. So it got phased out. The whole business plan got phased out by about 9 months, but we're happy. By beginning of Q2, we'll do the first set of refi. The reset of the project will happen. We needed some money from the LPs. So in this deal, we raised about $6 million. Me, Sandra, and Mike own about 40% of the whole thing because we deployed a lot of our capital as well. That was the first deal we talked about. So we're the biggest LP into this deal, and we brought in some extra money post the interest rate hike to get the project done. Right now we're in the tail end of it. And we need another $120,000. 4 of our LPs are coming in and backing us up. So that puts us on every single thing that we have to get done. And that's what we're solving for. We have a timeline, we have a cadence, we're just following that through. Second one is, so another way, property management company as is, asset management company as is, and we're looking at next year prepping for the refi, and we have 4 investors who will give us 120 grand, and we're done after that. It's an autopilot, right? On the Horizon side, as you know, we picked it up earlier this year. Execution of the CapEx is done, like almost 80 or 90% done. Operationally, we're in a very good spot. The new management company came aboard, we stabilized that. Now we are changing the culture and the rent collection. So biggest thing what we're solving for right now is the lead generation. That's the biggest focus right now. How many quality leads that we can get through the door, then we can improve that. So one thing you'll see us talking about it is the independent variable, not the dependent. I want to collect rent, which is true, but that's a dependent. For that, I need to have tenant in place. For that, I need to have a high quality team who can do the sales. To do that, I need to have high quality lead. So at the very beginning, it's the lead generation, and that's the focus for the lead generation right now. We have 7 new leads, 7 new move-ins happening this week. And then we are heavily focusing on the lead generation. The all thing David and I and Vinny talks about is what else we're doing on the marketing end. How do I position in the product? Is there anybody else who need to go? Do we go directly to the tenant base to market via Facebook? Or do we go do that plus we bring in a third party, lead generation company like this apartment locators, things like that? Or do we increase the account type that we have in apartments.com and get more dollar into the marketing and get a lead out of it? So Horizon, so you'll get into it as the execution phase. This is all about that. And the second thing is finishing the capital raising. We have $1.5 million gap so far. We have webinars being scheduled. We are following through the investors to finish the capital raising. So the way we're going to finish the capital raising for this one is to tell the storyline where we have executed the business plan. We have turned the asset around. This is the certainty of closing is there. 71% depreciation. Finish the year with some depreciation before the 71% becomes 50% next year. So that's, and some of you guys will take you guys through an exercise of raising capital using this project as you go. Shinoa, you had your hands up. Good point, Kishore. On the co-pilot, I don't know, so probably it can help. So let's talk about it. We'll go from there. Thank you. Okay, so Pasadena, it's an asset management. All the works belong to asset managers. Horizon, it's asset managers plus the property managers. So we're solving for different things. Amberwood, we have executed the business plan on the CapEx side. We have asset managers are all in sync. But lately we're seeing a drag in the property management company. That's because the management company is growing too fast. So we made a deliberate choice to replace the property management company. So we go into the interview process. We had 3, boiled down to 2. We boiled down to 1. So the company who's running Horizon is going to come back and take over the Amberwood, and we're deciding out the timeline. When are we going to communicate with who? So David, thank you for doing the exercise. David and Aditya, those to doing the analysis side by side. And we are taking our strategic position with Wellington, who runs the Horizon, and they're going to pick over Amberwood. So we're getting them ready, which is who's going to be the property management or property manager for that asset. When that person is ready, based on that, we'll go and give the notice to the existing asset property management team. The transition is always risky, so we are planning for the worst, hoping for the best, and that's where we're going to go. So our goal is to get the new management company collect the check next month versus the existing one, and that's hopefully our last optimization point. Then things will kind of go. So we ran that on a pro forma. Property management company had a timeline, had a delivery, and then when the delivery slips, we'll work with you. When it slips again, give you a heads up. But when it slips all the time, it becomes a drag in the system. Someone's got to go. So we are solving for a new management company for Amberwood.
If you don't mind, there's something really interesting that we're doing at Amberwood that I think is a good learning for our students. You know, we've probably already talked before about some of the ways that we can push value in the property, and one of the ways that we're doing it here are splitting units. We've got some 2-bed, 2-bath units that are not in high demand. We can collect maybe, I think off the top of my head, like $1,300. But if we had a 1-bed, 1-bath unit, we could collect $1,000. So by putting up a wall at the end of a hallway, a door, and putting a kitchen for $20,000, we can add additional, $700 a month. That's whatever, $8,000 a year. If I divide that by a cap rate of 6%, I've added $100,000 in value to the property with less than $20,000 of rehab work. So, one of those interesting things that we're not doing at any other property that I know of, but we've found a way to do it here. And we're doing 3 of them right now, which will add $300,000 of value to the value of the property when we're done with them. And it's a lot of work because you've got to go through the permitting, and you got a certificate of occupancies and all these sorts of things that go along with it in addition to just the rehab. But great thing. So I just wanted to make sure we didn't forget to mention that.
Yes. No, so thank you. Let me kind of repeat that a little bit to kind of recap that a little bit, right? David is right. So our goal is to, one of the best thing about commercial is we can synthetically increase the value. And the synthetically will be you collect more money and then valuation goes up. And also to collect more money, it's the quantity times the price, right? Horizon, Pasadena, or Horizon is just the quantity, which is the rent amount times the quantity, right? So price, we're improving that, but my quantity I can rent is the same. Amberwood, we're increasing the price and increasing the unit count. That unit count made a lot of sense. In other way, if we spend $20,000, we get 2 units out of it instead of making $1,500 hypothetically. You're making $2,500 at a 6 cap for $1,000 times 12. It goes up more than 20%. So it's a purely financial decision. If we invest $20,000, we improve the value by $200,000. We get the money back in a year. Why not? Right? So that was the driver for that one. David, thank you. I totally forgot. So appreciate it. So Berry Creek, it's a new construction project. It's a 10 acres in Georgetown. We have to change the business plan. Oh, 1 second. That's where the land development kind of sort of came in. We went in with the business hypothesis, we're going to build about 100 townhomes. That's optimized based on the city's feedback to about 90 townhomes. And then the city came back and said they don't, the capacity of the sewer line is not enough. So we changed the business plan to a Class A flex space or a business park. And that's where we at. And now there are about 8 little bitty trees, 7 smaller trees, and 1 big tree. City of Georgetown is dying over us cutting 3 of them. And so we tried the bottoms up channel. They said no. I happen to have a relationship with the city manager via some other ways. And so I got him aligned. He said he's gonna go pay special attention of this project. Now we're gonna come back and we're in the last leg of it. We need to schedule a meeting with the city planning team with our proposal that, hey, for us to make the project happen economically and take a property is worth $2 million to a $15 million valuation so you can make more money, city, allow me to cut 4 trees and we're gonna pay a fine for it. And I hope the city planner doesn't wake up on the wrong side of the bed and say something crazy, but that's the last thing. So this is a complete change of the business plan. We're trying to park it now so we can move forward with the next one as you go. Okay. McCollum, it's our largest asset. It's a $60 million the asset that we bought 2 years ago. It's a beast. When we bought it, we're the ugliest duckling in the whole block. But after we finished the capex and everything else, we are standing up the best looking asset. Interestingly, both sides of the property, we have 2 other assets. It's 3 properties on one side of the street. And the company who owned both sides, it is not Rice 48.
Tides.
Tides.
Tides
So
Equity.
Tides, yeah, Tides Equity. They're a big shop. They run good assets, very good way. So we were a very good synergy there. But those 2 assets went to foreclosure. As it goes to foreclosure, you don't have money to fix anything. So those 2 assets are being dragged down. That has a secondary impact on us. So we are again going back to the marketing mode. We stabilized that. Now we slipped. That's because the next doors slipped very much so. And now we are going back and protecting our tower from making sure the marketing end of it, we're doing the right thing. We look, feel, smell the good, and our property stands out. So still we can take a little bidding from association buyers, but still deliver a business plan. So what we're solving for here is purely the marketing. Okay. Macon and Warner Robins. So it's we are wrapping up the execution of the business plan. So that's where we at. These 3 assets, we are equity partners, and now we help them all the asset management as well. So our lead asset manager for here is our counterparty. So we deliver through them to what it is. So we meet with them once a week. Then once a month or so, the partners we talk. Same with the Macon and Warner Robins. The strong partner, they have about 1,000 units, and the Warner Robins, Macon Warner Robins area. So we are solving for the right now is just to kind of stabilize the asset. These 2 assets were supposed to be refied this year, similar to Pasadena, but they lagged. We kind of lagged on the capex side of it to finish the business plan. So as of now, Macon has been stabilized. So we are going for the refi next year. And from now till refi, we have the interest rate changed. So we need some plug for the capital. So we are finishing up the capital raise for that one. We have about $50,000 gap, and then it's done. Warner Robins in a similar path, but slightly differently. Instead of refining or raising money to do the refi, we negotiate with the bank, and the bank had some reserve. Half of the reserve they gave us to buy a rate cap, and we brought in some money to buy the rate cap, and then we are good to go. So here, it's just the property management play at this point, boiling down to marketing, which is the lead gen. Here, no lead gen is needed. It's just the natural course of keeping the tenant in place and bump up the rent as you go. We're just solving for $50,000 and $50,000 to $80,000 to make the project stabilized and fully funded till the refi. So all in all, you'll see a version of that plays out when we buy. After we did the acquisition, post-acquisition, hiring, firing, swapping out property management company, then putting a cadence to make sure that we manage the lead gen, right? So all of the projects, they follow the same 36 months pattern that we're going to use more. It's just the different phases of it as you go. It was a lot. I went down the whole almost couple $100 million of the portfolio in like 15 minutes. So I'll stop, take any questions, anything like that. Just, whatever that you have, right? As we go through it, anything color coded here, those are being stabilized, those are working, those are not issue, things are moving forward. We are just keeping in the background just to kind of watch over it, but there's not delivered stuff that we need right away to push this through. The Village of Fate is a Class A asset. It's a mixed use. First floor is retail, second and third floor is commercial. Harris Ridge, the new construction. Water is in Colorado. Sorry, these two are in the Carolinas. They're running, moving forward is great. X-Space, new construction. So Midland, it's a KP that we have done with Leo and David from our platform. And this is the piece of land that we have next to the Villages of Fate. We're looking at a new construction project. Ingalls, it's a partnership from Colorado, is working. So not much going on activities here. And the way we rank the projects, high priority to low priority with the dollar sign. That Pasadena, every week we delay the refi. It costs us almost $5,000 to $7,000. Horizon, every week that we don't have the right amount of occupancy, it's about $3,000 to $5,000. Amberwood, every month we don't hit the NOI, the potential sell slips by another month or so. Berry Creek, it's a major change. McCollum, we have two good teams are working, so we are leaving about another $5,000 to $7,000, per week on the table. So when we run an asset, we ask the question, what are we solving for? How much dollar are we solving for? And what is the most intense that decision we got to make to get up to the other side of it? And that's how this matrix gets put together. All right. And then a bunch of other stuff. It was a lot. So again, I give you a rundown of the portfolio. So our portfolio review happens the same way. So you'll be in this, you'll be in my seat moving in sooner than you think you will be. And then you have to run those assets and you say, hey, how do I drive decisions? How do I drive, the business plan and the pro forma and the performance? And then moving forward, we're going to talk about one particular asset and we'll kind of go down depending on the flavor of the week. So make sure that everybody gets an idea on the back end, what happens once you buy it. All right. So questions, comments, thoughts?
Eric here. Quick question for you with regard to getting familiarized with dashboard, etc. What hands-on will you give us, or will we be following you in your dashboard here?
Got it.
There's a lot to get familiar with regard to, like, I know spreadsheets. I built trading programs on Excel, but at the same time, I want my team to be right. Somebody on the team is going to need to be familiar. So I'm just curious, mechanically, day by day, hands-on. How do you see that progressing?
For everyone here, you will not play in the Power BI. That's going to be a huge learning curve. It's not going to be instantaneously. So the way we're going to go through the journey, the way we designed it, it's that introducing the concept of operations now just by talking it through. So when you go back into underwriting, you know how to price it. That's the concept. So that's the first thing, right? Because what I'm underwriting is I'm underwriting with the assumption that once we do the closing, we can deliver that inputs that we put it into the Excel file. So having this understanding that once you buy, once you sell, what happens in between, you need to put that into underwriting. So another way, I'll give an example. Again, you're going to be spending, everybody will spend the most amount of time in underwriting first. As you do the underwriting, we're going to give you a flavor of the operations. So whatever that you underwrite with becomes a realistic number for someone to deliver that. So, sorry.
So what you're saying, Sharir, is that we're not going to go into the complexity of the capital management in these layers that you're sharing with us now. We're going to stay focused on the underwriting, and that would pour into this in the future.
That's right.
Hey, if I can say too, so we manage a lot of different properties, and we have different property managers, and they all have their own software tool with Resman and Entrata, Build, Yardi, all of these different tools. And because we manage 15 different properties, well, 12 of them are multifamily. We need one tool where we can see all of these in one place. Now, if you're learning to do your first deal and you're going to run your own property, until you get dozens of deals with multiple property management firms, you won't necessarily need to be a Power BI power user. You'll be able to get most of what you need directly from that one property management tool that's telling you what your rent roll is, your occupancy, your work orders, your all of the same data. We're just pulling it into one place that's consistent. We could see it across properties and in different property management firms. So won't necessarily need to become an expert in Power BI to run your first deal.
Amen.
Thank you.
We'll see you in January.
So it's about just to understand the communication, right? We talk openly about it here. When the partnership has a good thing, we'll talk about it. When the partnership has a friction, we'll talk about it. So whole idea, give you guys concept, what happens, so you can get your framework ready early on as you do that, right? Not everything is perfect. Thing happens. That's the beauty of operations. But if you know what to expect, it gets easier, right? So our thought is, look, I have a set timeline to go somewhere. If I start driving thinking all the lights will be green, I'm in a world of pain, right? Versus 5 lights will be green, 5 lights will be red, and 2 of them will be yellow. I gave myself breathing room to get there. That's the whole concept.
And from this sort of the tone of these periodic asset management discussions, Schreier put it to me this way one time, because that kind of opened it up for me. He said, think of us as a teaching hospital. You're the surgeon. These guys are the residents, show them the blood. And so I said, okay, because prior to him communicating that to me, I'm thinking to myself, are there people in this audience that are also investors in our deals, that are also different stakeholders of different kind? And how careful do I need to tread in showing how rosy everything is? When we go through these, when we have these types of calls that we're sharing with the mentees, I mean, we kind of we talk the good, the bad, the ugly, the problems that need to be solved, and just the inside, how the sausage is made, that you necessarily wouldn't want your diners to know how the sausage gets made. I guess, yeah.
No, absolutely. I totally understood, David. I appreciate that context, because it's important to start to be effective here and to digest. So I appreciate that.
We want you to bring out your thoughts as well. Look, teams are great, but teams will have tough times to have tough conversation, but there's a way to go about it. This is what we practice, right? This is what we practice. This is what to brainstorm. Then we go about it. And again, it's not that complicated. You'll see it. First time I dumped a lot, but as you kind of go through it, you're gonna get the jive of it. It's not that many things. There are about 20 or 30 things you can do. I would say, yeah, 20 or 30 things you can do in any the most of the assets, and you can pick and choose what you do and what point in time. That's about it. It's not that complicated. But we're just talking about 15 projects at a time, so it sounds a lot, but it's not. If you just do 2 or 3, life is fantastic. You can walk around and do your thing. Okay, good. As we talk about it here, you'll see us talking through this financial framework that I briefly mentioned. Sorry, I'm pulling out the deck. It's gonna be part of the process as Ellen and everybody else. You guys get grounded. Sorry, it's a big deck. I'm trying to load that up. Okay, good. Keep asking questions as we go. Good question, Eric. There was a chat. Okay. So this is what we use for most of the time. Okay. All right, so this is the framework, execution framework. Most of the assets will follow this framework. Even a version of new construction will follow this framework. We just have to phase in and out. The properties will behave a certain way for 6 months, and you're gonna go solve for certain things for 6 months. 6 to 12 months, the same property will phase into something else. So whatever you see here, that's in a very generic sense is the model. Then sometime it's like a plane, like a chess. One goes here, then one comes back here. You deploy that resource. So it's really fun if you look at from that perspective. It's not that complicated. It's pretty simple. So as long as you guys have the experiences. Okay. All right, we're 47 minutes into it. I'll stop sharing and then open for thoughts, comments, questions. And I see everybody's some of the direct comments. Appreciate it. So for everybody as onboarding and grounding, we'll take you through the acquisition. And the simple one to understand where it has the most amount of line items that we can talk through is multifamily. And as we get grounded on multifamily, we can take the concept, get into the retail, and take the same concept, get into the new construction. And that's how we're gonna go into the underwriting model. And then within the underwriting, you need to think about operations, what happens, because you're setting the stage for the operations team. And we'll give you the flavor of that this call. So in about, I would say 60 to 90 days, everybody will be in sync. And then we'll go into our teams. As we go into our teams, we'll underwrite that way. All right, questions, feedback, thoughts? Or Shinoa, any thoughts on it? Any feedback on it?
No, I thought it was great. And I think there is that kind of balance, like you guys were saying, like how much sausage making are we showing versus not. And I think the point that you made at the very beginning of the call, which was basically, capital raise, finding the deal, 3 months, capital raising 3 months, and then managing the asset, 3 to 5 years, that really kind of puts it in perspective. I feel like a lot of people just focus on the finding of the deal, and sometimes that's where and even the funding of the deal, and sometimes that's where their expertise ends. But really, if that's where your expertise ends, you have to have someone who has an incredible back office, because the success, after you close, all of the success of your project depends on how good your back office is, and being able to kind of very quickly be able to manage your back, from a high level, being able to see what's going on all of your projects. I like the color coding thing just because it's like, oh, I've got to go fix something right there, right?
You and Mike are best friends. Mike wants the color coding.
Because I want to go through it quickly, right? And I want to know where my problems are. And it's a great, so I appreciate you guys working on that tool, sharing that tool, and emphasizing, how important it is to keep those updates, up to date, and walking us through that. So, and I think it's super important to emphasize that it's, again, after the close, it is all execution, and it's speed of execution. So you said something that was really super, I hope it's super valuable to everyone who's here. It's like for every month, you're talking about that two of your different projects. For every month that you sit on those projects, you're basically taking $7,000 or $8,000 out of your, wallet, out of your profit every month. And it's like, golly, it's like that really puts it into perspective. A lot of people don't, and all of you guys are like obviously experienced, but I talk to a lot of brand new investors who just have no idea the concept of, holding costs and speed of execution. So if your speed of execution is slow because you don't know what you need to be executing on, there's going to be a problem. And if your speed of execution is fast because you know exactly what you need to be executing on, then you're going to have some wins, and you're going to have some wins not just for you, but for the investors that are, entrusted you with their livelihood, their retirement, whatever it may be. So this is awesome. So I appreciate that.
Thank you. And now, I mean, just to kind of put another flavor to it, it's what I shared again. This is 15, 20 assets altogether. We believe anyone can run 1 to 2 assets with the right support from their back pocket. Have a job, no big deal. Go take some vacation. If you got the decent team going, you can run that property on your text. Up to $5-10 million, you can run it very simply. Once you hit that $15-20 million area, that's when you need to have somebody to help you out. But first, 1, 2, 3, no worries. You can knock it out very simply.
You have to start firing yourself from the, jobs that you're doing that you should not be doing, right? So, and the faster you can fire yourself, the more ability you'll have to actually scale your business. And, but the things, from one side of it is like the things that got you there, congratulations, that's awesome, way to go, high five yourself. But those are also the things that are going to keep you there if you're not adding, some, additional of the skills, complexity, reporting, analysis tools to be able to allow you to grow, to be able to, fire yourself, bring in either, like you guys have brought in the different tools to allow you to scale. So look at the things that are impediments to scale, figure out, what best practices are from other people who are ahead of you, and start implementing those, things. And if you are not, skilled in that area, which not everyone is going to be, the earlier that you call a spade and bring someone else into that, the more money you're going to ultimately make, and more money you're going to ultimately, refund to your partner. So, and don't expect to do everything. Like my guess is there are people on here who will say like, I don't want to do this. Awesome. Wonderful. Find out that right now. Find out that right now and solve for that right now by bringing other people, who can and who do. So, and you don't have to do everything, but everything still has to be done. It just doesn't have to be done by the rainmaker. And you guys are each the rainmaker in different parts of your business. So you may be the rainmaker talking to brokers and networking. You may be the rainmaker when it comes to raising capital, or you may be the rainmaker who is, the, reporting, or you may be the rainmaker who is the back office, who's, working with the teams who are running your projects. Figure out where you belong. And, and I don't want to say completely stay in your lane. I mean, grow in your lane, but you're going to have to, at this level, we're launching a rocket ship, right? So you got to grow with other people. So this is very valuable. Thank you guys.
Yeah, there are some people that, they want to do everything from nuts to bolts. They want to find a deal. They want to close on the deal. They want to run the deal, and, but only do one, 1 or 2 or a small number of deals. And, you also have the opportunity. Some people are just acquisition. Some people are capital raisers. All I do is asset management. And that's my corner of the world where I like to be. And, and that's, as you get into this business, you'll find, some people very, very analytical, mathematical. They love the underwriting and the all that, and they just, that is a sexy part of the business. Some people are really good with calling and networking and meeting people and raising capital, and some people are more operationally focused and more fit for just asset management. And there's some people who want to do the whole nuts to bolts. So and we've got some of those people too. So
yeah, I was one of them, and I am, I believe, right? If it's first 2 assets, no, first 5, 6 assets that we bought, 6 assets. First multifamily that I bought, I found the deal, I underwrote it, put it together, got the deal, but I had a JV partner. I always did at least have one partner, because something happens to me, my asset is running, right? If that is your play, nothing wrong with it. We'll go through the whole process one thing at a time. But on that note, though, from us, one thing is certain: whatever that you feel like doing, it's gonna escalate. So I'm gonna use a couple of names here, right? We have one gentleman. He's been hanging out with us, and he's going to join master's program soon. So that we saw a deal about a week and a half ago. We made an offer last week. We had a call with the seller last week. We sent out the LOI before we walked into the last week's training. Day before yesterday, we got the contract. And hey, title gets opened up today. So that is a $4 million land and a $15 million construction project, all happened less than 10 days. And then we needed a $4 million, $5 million raise. One party came, the seller stayed in with the $3 million. There's someone else committed another $500,000. Someone else committed also $500,000. We leverage each other. It happens quick, right? John, I met you last Saturday. And then he sent the 3 emails out. One was killed because we knew the asset. Second one, I went out there, day before yesterday, took a look at it. Directionally makes sense. We don't know the numbers or anything like that. But then, John, I got your text today.
Thank
and
you.
we already had the talk to the construction team last night. Hey, an offer probably is going to go out today and tomorrow, right? And John just showed up on Saturday, right? It just happens quick, right? So the point is just get in the nose, get the team ready. But what did John do? He's a broker. He understands the setup of the deal. Deal was presented. We do execution operations. We want to put the eyes on it, layered it on. There's a construction to it. We need the feedback. Went to construction team. They gave us the feedback. Day, here we are, and ready to make an offer. So congratulations, John. I haven't seen that fast quick, right?
Just to add, sometimes, I know the inside of the deal. Sometimes it's better for me to kind of, step back and let you take the lead and, deal with the seller directly, because a common friend is in between. Because if I come in a play, then I have to go through him and he has a say, and there's more friendship, versus a pure business sense. So thank you so much. If you can take this up, I'm sure, we can make this, project very successful. My gut's feeling, okay? Again, the numbers will make it very clear. Thank you so much.
No problem. And so that's the that's the whole concept. Leverage the team to get to wherever you want to get to. Once you get there, take a break. Realize, do you want to redo it again? Or do you want to do something else? It's perfectly fine. So on that note, welcome to the party.
One last question. Sharar,
Yes.
at 15 properties, right? These are the tools you're looking at. What are you looking at 30 properties? What are you looking at 50 properties?
Thank you. No additional tools. We are good. It's a software, it's a SaaS model. All I have to do, pump the data. So all I'm looking for right now is how many team members we have to run assets.
So the tools are in place to double the assets. Now we're jumping. So now we're going from technical capital, if you will, to people capital.
Human capital. Yes, 100%. So we lead with tool first. For us, if you ask me, we have all the softwares we need. We put the softwares in a place. Now LLM with the second revisions we're going to do. But for now, I think the tool perspective, we are a pretty good spot. It's right now is the human capital that we're looking for from the management side of it.
Okay.
Yeah. It's interesting. I mean, you have 10 more. The tagline is, if you have any asset, any size, give us 3 days. We'll bid to in a spot without even putting a foot on the ground. We should be able to tell 60-70% of the issues of the property just by looking at the financial data. So we can bolt on that way. We did it because we had to take. Go ahead.
What I like about that, and some of my left brain folks in the room, this may be giving them pause, right? So, you guys are really super left brainers, but, and sometimes people see left brainers as slow to make decisions, but left brainers are really fast decision makers when they have the expertise, when they have the skill, when they have the competence, and when they have the confidence, right? So, but don't make that move until you get there, right? So, but I mean, we all go at our own pace, right? So, for my left brainers who, kind of look at all this and say, wow, that's a lot to take. And I'm a left brainer. just know that your decisions become more rapid as you look at more deals, you get more skilled. And, it's like you go from these stages of, competency, like unconsciously incompetent. You don't know what you don't know. Consciously incompetent. Oh, wow. Watching this, I know now what I don't know. And then kind of going through this, phase of getting your reps in, right? To where you're consciously competent, like, yeah, I know all the different steps I need to take to get there. And then you go to where, you are right now, which is unconsciously competent, which is I could do this in my sleep. Like, so, but this is a process, and you have to, either honor the process or bring other people on who are, supplementing where you may be missing. So thank you guys for opening up this up for everyone. It was awesome.
I mean, also we're simplifying it for us. We should be able to, we're asking the question, going all those things that we have been through, how can we simplify? I think we're narrowed down to about 10 to 15 questions. When you ask those 10 to 15 questions, you'll get a dominant chunk of the assets answer right away. So we'll have a list. It sounds all those crazy, but there's a way of going about it. Once you pick up the rhythm, it's very simple. Spend 10 minutes. You'll be in the nose. It's not that complicated because system is doing the work for you on the back end of it, right? The reports are doing the work. So we have a checklist that we're going to bring out. Sanjay is working on it. It's about a series of 15, 20 questions. You look at it, very simplified, simple questions. By the time you ask, you get to the answer, you know where the assets are and what you have to do. It's not that complicated. It's fun. Trust me. It's we love it. It's weird, but this is where everything happens. Rubber meets the road, and it's so. Just hang with us. It's gonna get easier for you guys. That's all I can say. So,
great, guys.
cool.
See you
Thank
next
you,
time.
everybody. Have a wonderful rest of the day. I'll see you around.
Thanks, everybody.
And Melinda, I got your one. So what we do would go through the exercise of underwriting. We'll take those two assets, and then we'll finish the whole thing. Because for us, it's a big undertaking. So example, that asset itself, it's a big asset. Execution is a big execution. Dollar, it's a big dollar. We have to think it through and ask our question, what are the odds of winning? So from the massive side, we always say there are some folks are play to play, but we play to win. And sometimes we're not going to play the game if we don't have odds to win, even though we feel like we can play to play. Right? So we think it through everything, and then we say, hey, if it makes sense, we'll do that. Maybe there are some projects makes $1 billion. I bet you one of theirs out there, but I'm not designed like it. That's not my play. Right? So that's the way we'll walk you guys through. The numbers are numbers, but am I designed for it? How am I competing? What's my odds of failure? And then make a decision.
Perfect. Thank you so much.
Sorry. Okay. That's all. So thank you, everybody. Welcome. And I think, John, I'll follow up with you. And I think, Melinda, you already got that one. And just let me know if you guys have any question. David, appreciate that as well. Okay. Thank you.